fundsupermart.com.
With us today is Thorn, Global Head of Equities at PineBridge, to share with us his outlook for the equity markets. Hello, Robin. Thanks for joining us. So where do you see global equity markets going in 2013? What are some of the main catalysts and investment themes?
Well, I think 2013 will be a positive backdrop. We still have plenty of liquidity around, and we have stabilizing macroeconomic situation. And that typically bodes well for risk assets like equity markets. So we see as catalysts that investors will be willing to lengthen their investment horizons. They feel more comfortable looking for growth opportunities. And overall, there will be an environment where we will see less of the risk on, risk off that we've seen in recent years. And we will be more focusing on not necessarily asking questions, what can go wrong next, but really, where will the growth be? And that will be positive for equity markets.
So which equity markets will take the lead in 2013?
Yeah, I think the search for growth and for yield will continue. And it's still a scarcity, both growth and yield out there. So I think your question is very valid because there will be very different performances for various markets. And as I mentioned before, I think people will be willing to embrace fundamentals and embrace risk. And this means that there will be big differences what markets will do well. And for us, going into 2013, US stands out as an attractive area, despite a strong run, and so does emerging markets. In emerging markets, we're particularly positive on Asia. And within Asia, China and India, the big ones, do stand out. And also in emerging markets, we like Latin America, but in Latin America, we think we have to look more for the truly domestic growth stories. So we see that mainly from the smaller and medium-sized companies. And in US, I think it's a combination on what we think are still attractive valuations, and also this stabilizing economic backdrop. And as an example on why we think the economy is stabilizing, housing is very important in the US. It's a very good indicator of economic activity overall and has a very strong multiplying effect on the US economy. So we actually now see, for the first time since 2006, house pricing going up year over year. And we also see merger and acquisitions picking up. We see that as a strong confidence and as a catalyst, as you mentioned, to indicate that CEOs and investors are becoming more positive. They dare to believe in the future, so to say. And on the merger and acquisition side, we saw a 30% pickup in December year over year, and also in 2013 has really accelerated. And when it comes to Asia, we like many Asian countries, but in particular China and India. Probably don't have to tell you why we're excited about the long-term prospects of China and India. We do have some concerns in the near term. People think maybe that China's gone up a little bit too fast. We think that China is still very attractive. And we like the fact that the spending is shifting from the state-led investment side to more of a focus on the domestic consumption. That will make the growth story more stable and be able to last into the years to come. India will not grow as fast as China in 2013, but if you look at a 5-year period, I think India will actually grow faster than China. And finally, I mentioned smaller companies in Latin America, and that really means avoiding or not necessarily focusing on the oil names or the commodity names, but the ones that are really benefiting from the domestic consumption and in Latin America. So we have to look towards the smaller and medium-sized companies for that.
Which sectors are you more in favor of?
Yeah, we are very positive and excited about the fact that poverty levels in emerging markets are coming down, and there's an emergence of the middle class, and that means much more of consumption. So as long as valuation levels are attractive, consumer sector is something that will feature strongly in our portfolios. And this is really related to China's new focus away from maybe spending on things that requires a lot of commodities and more on consumption. So we're clearly more positive on consumer versus commodities. And we also think that in, for example, the US, when people are feeling more certain about the future, there will be more spending overall. There's a pent-up demand on capital spending overall from US companies. And we believe that pockets of industrials and technology will benefit from that pent-up demand being released.
So do you see the investment case for small caps grow stronger?
I think that's a very good question and a very timely one, because if you look at the last few years, even though equity markets have been going up, it's been very much driven by inflows into passive funds and to ETFs. And that's meant a lot of automatic buying of stocks that happen to be large in the benchmark, and not necessarily the stocks that you buy because the fundamentals have been strong. And that has meant that the valuation now for small caps look very attractive compared to the larger cap companies. So I think it's a very good time to think about small caps.
And what's your outlook for currency movements in 2013?
Currencies, well, we did have a lot of volatility in 2012. And we think that will continue into 2013, which doesn't have to be a bad thing. You just have to be on the right side of it. And one of our top recommendations, main recommendations going into 2013, was actually to be short the Japanese yen. And despite its move since November, we're still of that view. I also think that the euro will have to come down to weaken for the eurozone to regain any growth. And not surprisingly, what's left are really many of the emerging market currencies that will probably be on the appreciation side again.
So finally, can you give us a piece of advice for retail investors in terms of asset allocation this year?
I must say it's really buy equities. And I'm not just saying that because that's my area that I work in, but I've actually said, which is maybe most appropriate in this part of the world, that 2013 will not only be the year of the snake, but the year of equities. And I really believe that, and we are overweight equities in our portfolios. And we think this is a multi-year trend that can continue going on. And as mentioned, not all equities are the same. Still focus on the US on the developed side, and then in emerging markets, focus on certain pockets with stronger growth.